Right. Hello, good evening, everyone. So today, this is our live stream session for the preview on our round and search operator analysis course. So I'm Kelvin here from round and search. So this is our first time that we are doing a live stream on Facebook and also on YouTube channel. So because it's the first time, so if let's say there's any technical issue or maybe the quality, okay, do let us know, feedback to us, okay, so that we can actually improve it in the next live stream session. All right. So maybe for some of you who have not seen don't know us much, probably you got this share to your friends, and then I mean your friends share it to you. So let me have a bit of introduction of myself. But okay, before I do some introduction of myself, I want you guys to help me to do something, is that help us to share this out to more people, that how we can use the operator analysis to track the big boys in the market. So for us to look for their accumulation and then for our own benefits. So no longer using the conventional way of analyzing the market. So give us a like, okay, for this post, for this video, and remember to subscribe to our YouTube channel and like our Facebook page as well. So share this out to your friend. Let more people know about the way to analyze the market using the operator analysis. Okay, so basically for myself, I have been trading in the market for I think almost when I was 19. So right now this year should be about like 13 years. Okay, 13 years of trading experience in the Malaysia stock market, and I looked into fundamental before because that was my degree. That was what I was majoring in, and of course later on look into technical analysis as well. But I find that it's not really that helpful. Okay, like many of us out there right now who are relying on technical analysis is always late for entry, is always not sure whether the price will hit the profit target, and when the price retrace, not sure to cut loss or not. Sometimes it start to have a rebound after hit our cut loss point, and then we have to ban the cut loss rules, and all this thing happens and actually result we will have a result of inconsistent profit from our trading or maybe our investment. And of course, the most serious thing is that when we apply some of these technical analysis, is that we find that um, when you look into some of the stocks, okay, you got trapped into it. So we enter at a high price, and then you start to hold on all the way down, and do not know when to actually start to get out, or maybe when to sell it. But of course, up until that point, it's a bit difficult for you to sell. The reason is because there are too much losses incurred. This will incur happens is most of the time when you hear or someone to tell you to buy these stocks. That's why you have this kind of experience there. And then when you ask that person will actually start to tell you, oh, the fundamental is still good. You can continue hold on to it and things like that. Okay, probably some of your dealer or maybe reminds you, or maybe some of the gurus that you have heard. Okay, so these are the things that I find that why technical analysis and fundamental is not so reliable into the market. And I've been looking into a lot of indicators and also technical analysis recently to share out to some of our viewers out there. I find that the technical analysis is more of to tell us what is happening right now. It's just like reading the news. It's already happened, and then it tells us, okay, this happened. Okay, so it's more like an update of the current market, but it doesn't really tell us what is going to be, what is the market thinking about it. So if you find that the news, okay, if you have read news a lot, you will find that whenever the market is down, they will somehow find something to actually support the market down, instead of telling us really what is happening out there. Now, sometimes, not to say every time, but sometimes you see that. Okay, so that's where I find that I don't really read news anymore, because it's not giving us very reliable information. So the information is often too late when it's published to the public. Everyone of us, we know about it. So it's too late for us to look into it. So that's why I dig deeper into it to look at all the price and volume transaction that is done, okay, in most of the stock that has really moved up higher. All right, so that's where I started to look into the big boys. So I started off in a very difficult way, very hard way, where I look into day trading and then I have to cut loss, cut loss, cut loss, cut loss, and then slowly I look into how they do the accumulation, and slowly from the transaction data that I see how they have intention to push up higher, that they have no intention to push up higher, and then spending after market hour, I spend about like 2-3 hours every day. Last time I look into the whole list of stocks in KLSE. So I go through all of it, and then I find those stocks that they previously they have. I mean, right now probably the price already move up a lot higher, and then when I look back into it, because I believe in one thing is that everything that caused this price move up higher, there must be a reason behind. So I look into it, I find that there are some identical price movement and volume movement that is done, which we call it the accumulation, or we call it the moving house. So most of the time, the big boys, before they move the price up higher, they will do a accumulation. So this is something that a lot of investors or traders out there who want to know how to look into this. How do we know the accumulation? But there's a lot of people out there also, they want to know what is the cost price of the big boys accumulation, which this is not important for us, for retail investor, because we are not going in to accumulate together with them. All right. So what we need to know, because we are just a small peanut and potato in the market. So what we really need to know is that when are they going to push the price up higher? All right. So that is the main thing that we have to look into it. All right. So if let's say we let you know when is the accumulation, but you don't know when it's going to push out higher, because sometimes accumulation will take like 1 year, it could go take 2 to 3 months, or takes up to 1.5 years. So I've seen that period before. So there's no point for you to move in together when they are doing accumulation. Most important thing is about the timing, when to move in. Okay, so when you understand about this, basically you can see a lot of stock, they have a lot of not a lot of stock, every now and then there are some of the stock that have accumulation. Of course, it's not that frequent, but one time the return is actually great. All right, so later I'm going to share with you some of these stocks that they have done the accumulation before. All right, but of course, because this is a previous session, I need to share with you guys also, because maybe some of you who have attended this session, and then you start to think like, wow, it seems very easy and things like that, then you start to apply into it. Okay, so it takes a very long time, not some time, I wouldn't say very long time for me, because I learned from nothing. So it takes very long time for me to understand and do a lot of research and analyzing into it. But if let's say you really want to learn about this, then I need to spend some time to actually share with you. That's why our training course is 6 months. It's not just like 2 days of training course, okay? Because the 2 days of training course we have is just a theory side. Then later on, we'll keep on sharing with you the live, the current market stocks that they have accumulation, how to identify it, how to identify the small details of all these transactions. So it is a whole package. Everything is important inside. If let's say you just pick some of it and then start to apply into it, I would say it's not going to be effective. Okay, so I need to warn you guys first. All right, so I'm going to share with you some of the example later on. So all these example is for sharing purpose, educational purpose only. So it has already passed. There's no point for you to look back into this kind of stock. So it's not an offer or to buy or sell this kind of stuff. It's just an sharing. Okay, so for our main problem here, for most of us as an investor, when I just started, we always have this thing, like I say, technical analysis and fundamental analysis is not really helpful. Fundamental is helpful in a way where we need to keep track. If let's say you are going into long-term investment, then we need to keep track whether this kind of stocks they will last. The last quarter, are they doing okay? So from there we can adjust our investment portfolio for long term. Then technical analysis, that's another problem. Resistance breakout fail, indicators is lagging, and there's a lot more reason for us to look into it. Okay, then that actually affects our consistency in profit. Why is that happening? One of the main reason is that all this analysis, it doesn't really convince us or tell us what is happening to the price movement. Okay, what I'm saying is that yes, technical analysis is telling us the market, what is their psychology behind the market, but that is how it become the technical analysis is because they're looking at the market itself. Is everyone have the intention to have the power or to influence the market at once? Okay, but if we are living in the financial market where there's a lot of big boys, it's not just in Malaysia, we can look into US market as well, how the price has been moving up and down. You can look at cryptocurrency like Bitcoin or maybe the Dogecoin that Elon Musk have tweeted. It can actually affect the price movement. So it's pretty much that tell us right now the market is not about you, me, or whoever out there, A, B, C, D, A to Z, who can actually the chart is telling these people the intention or their psychology. Okay, but it is not telling us what is the big boys intention, what are they thinking. So that's why technical analysis, I find that the traditional one is not helpful to our trading. That's the reason why. So that's why I look into the big boys. So if you understand how the big boys works, you will find that a lot of technical analysis technique, chart pattern, or maybe some of the indicators, you will understand why it doesn't work, because every one of us are using this. So the big boys knows about this. So that's why they are using this to actually indirectly controlling our investment buy sell decision. Okay, it's more like we are the herd, the sheep, every one of us. We got direct back into the farm, and then we got slaughter, and then without knowing what happened. Okay, so that is the things at this point over here. What I'm going to share with you is like for example, let me share my screen over here so you can see. Okay, so from here it's pretty obvious that this is one of the, if you learn about technical analysis, it's more like a symmetrical triangle, right? So if let's say there is a breakout at the resistance, then the price will continue to move up higher. Okay, so this is usually what the resistance, the retail investor are looking at. But often it's either success or they don't success. Okay, like for example here they have like ascending triangle. Yes, it's success, it went up higher, so you make the profit, so you become more confident. When a symmetrical triangle actually happens, then you wait for the resistance breakout. So that is the traditional technical analysis. So you can see from here that this is a resistance breakout with a high volume. So when technical analysts, when they see this, they will start to think like, oh, the entry timing is right now, so they can start to move in. So imagine if you enter at this point here, which is about 63.5 cents. So let's say you place your cut loss, maybe you calculate about like few percent below. So let's say which is around at this point, you put your cut loss at this point over here. Then next thing, the price continue move up higher. Oh, one thing I forgot about it, we need to find where is the take profit point. So this is how the traditional way of looking for the take profit point, right? So by right, your take profit target, projected take profit target is at this point. You are looking at it at this point, taking profit at about 65 cents. So your entry is about like 53.5 cents. So you are looking at about like 10 cents profit over here. So when you start to look into it, then the price start to goes down and down. Now you start to think like, should you cut loss or not? whether you should cut loss or not, or you should continue to hold. So since it hit the cut loss point, most of us first time you'll be very disciplined, you follow it, so you cut loss. If let's say for those of you who are second time you don't cut loss, the reason is because previously it hit your cut loss point. Why you don't want to cut loss is because that your previous trade that you cut loss earlier, but the price actually rebound back up. Okay, so these are the things that it will affect. So first timer, you cut loss is good. For those who did not cut loss, then you start to think like, there is another rebound. So you think like, okay, maybe right now it averaged down. So when you start to average down, the price goes up again, then you start to think like, oh, for those who cut loss earlier, they start to think like, oh, I shouldn't cut loss. All right, so right now the price moved back up higher. Then at this point over here, those who did not cut loss, they are happy about it. They continue to look into it, and then the price goes down again. So down to a point at this here is about 27 cents. So at this 27 cents over here, imagine if you enter at 50 over cents, 50% down. Okay, so these are the things over here where when you look into technical analysis, you do not know this kind of retrace, whether it's just a normal retrace, whether you should actually cut loss or not. That is the problem here that we can that is the problem here that we can see, that it doesn't really tell us that what is their intention. Okay, so if let's say we would know at this point over here, when they have just started to have a retrace, if we know that at this point they have no intention to push up higher, then we can take the profit and run, right? We don't have to wait and go through up and down and then lose about 50%. Okay, or maybe if you understand how the big boys works, we would not enter at this point over here, because at this point it's showing us that the big boys are at the peak of their price, so they have no intention to move up higher. Okay, so this is one case over here that I want to share to you. So it's also before I look into how the big boys work, this is also something that I always ask myself. When the price is moving up higher, that when it doesn't hit our take profit target, what should we do? Okay, what should we do about it? Should we just take profit or should we just wait? So here is the confusion. We do not know what to do here, right? Why we do not know what to do here? Because we don't know. When we learn about the training course, about technical analysis, it's all about telling us, okay, if he hit the take profit, then you take profit. When he hit the cut loss, then you cut loss. It doesn't tell us that if let's say in the middle there's any changes, how should we react to it? How do we react to this kind of situation? Okay, how do we know that the retrace is not just a short-term retrace? It's really the price going, it's a reversal of the trend. Okay, so these are the questions that we need to ask, which I ask a lot when I look into how the big boys actually works. Okay, so these are the things that we need to ask. If let's say you are trading right now or investing right now, any price movement that have a retrace or any price movement that is moving up, if you do not have the answer to it, then means that the analysis is not really good for you. Why? Because it doesn't really tell you like what is happening here. Okay, so we need to know how the big boys actually works. So how the big boys works is that for example here, I'm going to show it to you. Like, okay, the list over here is where I have put into it the historical, they have done the accumulation and then the price has moved up a lot higher. Okay, so one thing here is that when we invest into the stock market or trade in the stock market, that we have to understand one thing is, first thing is we need to know what is the big boys intention. What stage are they in right now? Accumulation, push up, okay, distribution, markup and distribution, okay, and then at the peak, final distribution, and then markdown throw with the price or everything down. Okay, so if you hear about what I mentioned, the keyword I use, like accumulation, markup, distribution, markdown, it's a bit like Wyckoff method, which he used price and volume and also using the tape reading. Okay, so yes, I actually read through the Wyckoff method. Okay, I have the idea of following the big boys, and then I read through the Wyckoff method, and then I find that it's actually almost the same. But it's just that you can't apply everything into Malaysian market because it's a different market and also a different era. All right, we can't use the US market method or maybe a long time ago method into our current market because they have short selling. Market participant is different, okay, which means the market size is different, and then also the regulation is different as well, okay, and that's why all this we cannot plug and play into the same market. That's why you see a lot of courses or maybe you learn some of the technique. It's useful to some in some of the market, but it's not useful here. The reason is because it's different market. That's why it's not useful. So you cannot just copy and paste the thing. So that's why from here I study the details of all these transactions, how the common price movement that the big boys have done in Malaysia stock market. So that's where I come up with the operator analysis. Okay, so of course, the operator analysis is right now is mainly for the strategy that we have, entry rules and the cut loss rule, exit rules, which is the take profit rules. The accumulation is based on Malaysia only. All right, so it doesn't really apply to other market, but the same theory, if we apply into a different market, like I tried before, you apply into a Bitcoin market or just Bitcoin itself, it's actually work. Just that we need to change the entry and also the cut loss, the exit, which is the take profit rules, the point as well. Okay, I have some of my students, they tried out on Nasdaq, so he said that in penny stock it works. So I myself haven't really looked into it, but as long as you learn about this, you know how the big boys idea, the big boys mindset, whenever you go, whichever market you go, you can apply this. Just that you need to have the technique, the skill, which we will actually guide you through in our training course to tell you how to actually strategize your trading method, your trading strategy. Okay, so we just need to apply some time to look into it. As long as we have the data of the transaction data and the price and volume, all right, then we can look into it. All right, so of course, one thing about a lot of traders in the market is a lot of people are thinking like Malaysian market, the profitability is not that great. Okay, so they start to jump in. They are not making profit basically. They jump into other market like Forex or Bitcoin or cryptocurrency or US market or Hong Kong market or Singapore market. All right. So I don't really agree with that because what I see here is that Malaysian market is actually a kindergarten stage, or maybe not that bad, okay, primary school stage. If let's say you have not graduated from this school and then you start to jump into Forex, it doesn't make sense. Because Forex, the liquidity is huge, much more bigger than any of the market or the stock market. Okay, if you look into Hong Kong market or maybe the US market, is so much more trading volume and the regulation is much more different than stock market. Okay, so you can't say that the profitability here is not good. It's just that you do not know how to look into it. Okay, because here everything is very simple. Accumulation, push up, that's it. Okay, distribution. So Forex or US market or Hong Kong market, they can do short selling. Okay, they can do a lot of things over there. They can just apply some of the news, release some of the news, and then create the price down. At that point, then they buy back, everyone's selling, then they buy back, and then they push the price up higher again. So there's a lot of all this kind of technique for these kind of big boys to use it. So that's the thing. The only thing that I find that a lot of people that they want to go into a like Forex trading or maybe some of the other currency or maybe other trading platform, the main reason is because the entry is much more lower, because you can just use 100 USD to actually start to do the trading, which I myself, I think the 100 USD or maybe 50 USD, it doesn't really gives you a lot of profitability. The chance of you making a lot 100% is high. At the same time, for you to burn your account is high as well, because the volume, the lot size that you can buy is 0.01 volume. Okay, so 0.01, if let's say you have $50 inside, so each peak that the price move is about 10 cents. Okay, So 10 cents is about equivalent to about, 5 cents. So equivalent to about like maybe 1%. Each price point movement then is 1% of your total capital. So that's why either you make big or you burn everything. I do see a lot of people, or if you have noticed, a lot of some people are telling you, oh, I make 100% from the this forex trading and things like that. When you look into the account, it's only 50 USD. 50 USD, you can just put everything in and then you just click whatever buy sell at the same time. Then you make double from there. Then you just show it. Okay, it's simple. So if let's say you want to really a good trader, then you don't look into that. Okay, 50, 100 USD doesn't really, the risk management is not even able to do it because the lot size is huge for that kind of capital. Okay, so that's aside from it. So that's, I just want to tell you guys that don't fall into all this small capital, then you can move in. You can burn your account easily. Okay, I've tried before, so just to warn you guys. All right, so next thing is I mentioned before, we need to look into operating how the big boys operation. So we need to know when is the accumulation. So right now, first thing I'm going to share with you some of the stock that they have the accumulation and then they have already pushed the price up higher. Like for example, last year 2021, we are able to look into YBS, HP Globe. Okay, so YBS, we didn't actually exit at 72 and the 726, we exit somewhere around here. So let me zoom out first. So I just take out some of these tools over here. Arrow line. Just to show you, this is how generally how the big boys actually operates. Okay, this is YBS. Last year we move in, okay, not really last year, but around, yeah, last year January, before January we already moved in. December 2020 we already moved in. So then the price, you can see that time was about 18 over cents, so it moved up to 70 over cents, right? So this is just to show you. You can see accumulation, it can up to a few months. So this is one of it. Let me show you another one. So you might think like, wow, then you can make a lot from there. I won't say we'll make a lot, just that I need to tell you guys something is that we have a position sizing. We don't expose too much risk into one stocks. Okay. Another one is HP Globe. They have the same thing. Price move up about 15 over cents up to 40 over cents over here. This is the power of how I can identify the accumulation. You can check back some of our Facebook posting, then you can find some of it. All right, pulse, we didn't really did we catch it, but I think I shared it to some of our clients, some of my clients actually, those have a trading account with me. Okay, so they have the accumulation as well at this stage over here. We throw it out so you can have a look into it. So big boys, we have two ways of pushing the price up higher. Either they move up slowly or they move up fast. Especially when the market is bad, like recent last year, after April, May month, then you start to see a lot of big boys, they push up fast because they know the market is not good. So that's why I quickly push the price up fast and then distribute out slowly. All right, so this is the usual way that they do. Then we do have also, Leon FB wasn't there. I can't remember what else, but let me share with you some that they have the accumulation. Yeah, you'll find something very similar here. Okay, what I want to share with you here is that usually when they do the accumulation, you would not notice it. Why? Because if I zoom in, you will notice that the price movement is not liquid. So it's not that liquid. So you won't even notice it. So that's why if any, of course, it's a different if let's say you look into like bigger cap stocks. But if you look into a smaller cap, this kind of stocks, you will not notice it until they create the volume. That's where you start to see the activities. That's where the technical analyst trading signal, chart pattern signal actually comes out. All right. So that is where it shows you, that is where it attracts your attention. So basically, all this volume or price, the big boys know that you won't enter into a stock unless there are volume and the price is moving up higher. Because if you look into these kind of stocks, it's not liquid. So you start to think like, can we enter into this? Because it's not liquid. If let's say enter, then we can't exit. Okay. But this is how it works. Okay. So of course we won't enter when they are doing the accumulation. We enter later, somewhere around here, when it shows that the housewarming. Okay. We call it housewarming signal. Housewarming is where we call the accumulation is where they have moving house. Okay. Moving the shares around. So we don't go and disturb our friend when they have a moving house timing. So we not to say disturb, we visit them when they have a housewarming. So when do we know that they have a housewarming? We show it is shown here. Okay, because most of the time you need to identify this. I can tell you how to identify this, but you need to do a lot of practice. Okay, so usually they'll do it quietly, and then the price will press it back down lower. Sometimes it takes 2 to 3 months, sometimes it takes 1 year. So that's why there's no point for you to enter when they are doing accumulation. So you wait for it to at this point over here where they have the price don't really press it back down lower. Okay, so of course there are a lot more other criteria as well. So you can look into it in our training course. So you can see here when it's at the peak, the price about for this HB Globe is 16.5 cents. Highest point 38 cents to up to the high point. Okay, then YBS the highest point is 72.5. But that time we exit, I think somewhere around here, 42 cents. But it's the entry about like 20 cents. So 42 cents is about like double. So it's okay. So right now, but doesn't mean that you can look into this anymore because these are the old stocks. Okay. So Edaran 36 cents plus, and then you move up to about 1 ringgit plus. Then we have Pulse. The point is about 37 or 36. The highest point they move out about like 60 over. So these are the stocks that when they do the accumulation, they will start to move the price up higher. And most of the time, when do you notice it? Is when the price is moving sideways at this point over here. So this is the point where a lot of trader and investor, retail investor only notice it, because this is the point where they start to distribute. Because how they distribute is the big boys, they don't sell stocks like us. They don't sell shares like us where they throw everything at one price. They have a lot of stocks in hand. So what they need to do is they accumulate. When they push the price up higher, they need to sell. Why they push the price up higher? Because they need to mark up the price so that when you come in, you can buy at the higher price so that they can sell at a higher price. So usually 80% of the shares are being sold on the way up. Okay, so when it's sold on the way up so that they can make the profit. So when it reaches to about like 20%, we start to see like there are signals to tell us that there's no retrace, that there's a lot of upper shadow are being formed. Why a lot of upper shadow are formed is because that is where they push up the price in the morning. You see a lot of stock that push out the price in the morning when before the market turns back. They push out in the morning to gain your confidence. You see like, wow, seems like this stock is moving up higher, it's bullish. Then you start to jump in. Of course, when you jump in, you won't buy directly. What you do is that you kill your order at the lower point, at the lower buy price. That is when they will do they will place their buy order. The big boys will place their buy order at a certain price that is a very high range. Maybe let me share to you some of the example. just put any stocks, okay? Just an example to show you. I'm not saying that this one is. Like for example, usually this is what we see, 5 buy sell queue. Maybe at this point over here, you would start to think like 98 cents is the support because you think that at the buy side, there's a lot of huge buy order here. So you think like this is support. In fact, these are just order, it's not transacted. So they can cancel off anytime. So what they need to do is that they need to monitor how many retail investors start to queue at the support, so-called support and above, okay, which is 98.5 cents. Then they monitor, they find that, okay, it's enough right now. So what they need to do is that they cancel off their order and then throw it down to you. That's why you see in the morning, the price push out higher and then they throw it back down at the end of the day because they are doing distribution. Daily, every day, they do the same thing. Push up, press down, push up, throw up, push up, throw up, distribute. So this is why a lot of retail investors always get trapped at the high price because they hear that's where the news actually comes in, talk about it, forum, everyone talk about these stocks, then you start to jump in because you don't want to miss out. That's why you get trapped at the high side. Okay, so that's why retail investor will always enter when the big boys are pushing up or near to the peak. All right, and then when the price start to throw down lower, that's where you start to think, why you always buy stocks at the high price, and then it's something like this. Okay, the price press it back down to about 20 cents. All right, so these are the common things that they work in the market. So, and also you'll find that why you always enter the stocks when it's already move up higher, because when they are doing accumulation, they will not let you know. They will not create high volume as well. Anyone who tells you the high volume is actually the big boys, I can't say that is completely true, but it depends. I would say like the high volume, we need to know what is the intention of them creating the high volume. But when they are doing accumulation, they will not create a high volume. All right. But when they are pushing up higher, why do they create the high volume? And the high volume comes in, does it push the price up higher? Or just comes in once, make it so obvious for you to see that every few seconds there are transactions coming in that makes you think that there are a lot of buyers coming into the stocks. Okay, if you see something in the market that is easily seen by you with your eyes, you don't trust it. Okay, don't believe it. Why? Because it is shown to you on purpose. Because they want to show to you every 3 seconds they buy one big lot, or maybe every 3 seconds they sell one big lot. Then you start to feel fear, or maybe you start to feel greed. Wow, there's a lot of people coming in to buy. That's where you start to jump in, and then you get yourself caught at the high price. Okay, so we need to know how they operate to protect ourselves, and of course, best way is to actually to make profit together with them. All right, so these are the solution that we can look into it, where it helps us to identify the accumulation, and then we can get the return from it. All right, right along the way, we can use it for midterm, or we can use it for short term. Okay, if let's say we miss out at the point where they have the moving house, we can re-enter into it using a short-term strategy, and then when they start to throw down lower, we can identify the short-term trading opportunity, or even you can even call it the day trade. Every time when they have a rebound over here, that we can capture all this point over here by using the price and volume only. Okay, so most important is you need to understand how the big boys operate. All right, so from our course here, what we do here is that, of course, we will share with you how does the big boys do the accumulation, like I've shown you before. Okay, how do we identify it when it's not much of activities? All right, and then we wait for it. When is the best time for us to enter? And then after you enter, if let's say you want to average up, or you want to wait for you have missed the first entry signal, then you can wait using the apple tree, the strategy that we have for the second entry, or you can move in and out for short term. Depends on your availability. All right, there's no such thing as short-term trading is better or day trading is better or mid-term swing is better. No, it depends on your own comfortability. Okay, if you're comfortable with just buy and swing because you have not much time, you have a main job or the main job to actually work on it, then investment, stock market, it is a secondary income for every one of us. Okay, so if let's say you want to look for day trading, it's covered in the course as well. Okay, but there's a terms and condition for it. For the day trading, you need to open a trading account with me so that I can share with you the live transaction. Okay, the live stream. Okay, I'm gonna do a live stream for those who sign up for this, and at the same time you have a trading account with me that I can share with you on every Wednesday morning. Okay, so it's a 6-month course. So in this 6 months, what you will learn is that you learn how to identify the accumulation, and then how to exit, when to see when is the peak of the price, so you can exit at near to the peak. You no longer need to actually wait for the drag, the projection of the profit target of the maybe ascending triangle or maybe symmetrical triangle. All right, so that is not very useful, I find, because it's either you exit too late or you exit too early. So because that is a projected, the expected profit target, the expected profit target is based on our own expectation. It's not based on the big boys expectation. That is what the current traditional analysis are sharing, because it's more on your own expectation. What we are sharing to you here is look into the big boys. What is their expectation? When? If let's say today they still have the intention to push the price up higher, then we continue to hold. Next day, if let's say it shows that they have no intention to push up higher, then we exit. Okay, so it's more about following the market. In this way, it's more of following the market instead of following yourself. So you will no longer using using your guts to trade or invest in the stock market anymore. All right, so our training course will be a 6-month training course. So the next date will be on 8th of August. All right, so before I share with you guys on that, I want to know any of you have any questions here. You can type it in the comment section. Right? Oh, anything to talk about the stocks, okay? So I'm not going to share about any stocks because this is not a stock sharing session. Okay, you can ask anything about the stocks. It's my first time looking into this, so if let's say I miss out anything or it's not working, then please let me know. It's live, okay, it's not moving. Oh, okay, I can see it right now. Okay, if let's say no question, you can write down the question first, then later on I'll just attend to you guys, all right? So I'm going to share with you the training course. The next training course will be on 8th of January, which is next week, starting next week, the next intake. So 8th of January, let me check again, double check again, is it 8th of January? Yeah, it's the intake will start on 8th of January. So 8 and 9 will be our theory class. So theory class, we're going to share with you on all the theory, how the accumulation is, how the big boys actually works, how to understand them, and our of course most important is the risk management as well. Then every week we will have a revision class. I'll go through with you based on the current market examples. So from there, you can learn better from it. So the first month we're gonna talk about the first month we're gonna talk about the entry rules, exit rules, risk management, cut loss rules. So we're gonna punch you with all this first. Why? Because these are also important. All right. Without the risk management, if you know how to identify big boys, without risk management, it's not gonna work. Because I've tried it before. I can make profit from it. I can lose a lot more from it. Okay, so it doesn't actually help us to have a consistent profit from it. If let's say without a good risk management, which we have it, the position sizing and all of it to help us to reduce the emotional trade as well. Okay, with a proper risk management, it can help us in our psychology, trading psychology. All right. Then second one, we're going to touch on the accumulation. So all about accumulation, how to identify the the moving house. Okay, how do we identify a housewarming? Then the third one, we're gonna look into the short-term strategy, the apple tree. How do we gonna look into short-term apple tree? What is the best criteria for it? What is the best transaction details that we have to look into it to identify the best one? Okay, of course the best one is, but there are risks as well. So we need to have a cut loss as well. So all these will implement into it. Then the fifth month, we're gonna look into the rebound. Okay, when the big boys are doing a distribution, when is the best time to look into it for a short-term rebound? Okay, so we can capture some of the returns from it. All right. Then the sixth month, we're gonna look into the transaction details. So from 5-minute charts to the buy-sell order as well. All right, and of course the transaction data. I'm going to show you what is the transaction data here. The transaction data will be something like this. Let's say I just right click into one of the stocks, which not many people are looking into it. This is the quote movement. This is a bit little. We'll look into top active stocks, any of it, quote movement. So this quote movement over here, it shows us that the left side here is the buy volume. In the middle is volume done and also the price done. Then right side here is the sell price and also the sell order parking, the sell volume that is parking at the sell queue. So it tells us that each time how much is transacted. So all this, the transaction pattern, the time interval between the transaction is important. All these are telling us the intention of the big boys. So if you know how to look into this, then you can further understand what is the big boys intention. We know that if let's say they are attracting buyers, then we don't enter into it, so we can save ourselves from it. All right. And also whether this buy sell queue over here, the order is being transacted or being cancelled. Okay, if let's say it's being cancelled, then it will not shown in the volume done, just like this one over here. The 5,000 are being cancelled, but it's not done. Okay, so we'll guide you through this in the 6 month. Of course, within this 6 month over here, if let's say you have you have a trading account with me, I'll go through with you the whole 6 month on how to do the day trading. Okay, so how to really look into this of the transaction data, and then from it you understand how fun, okay, and exciting about doing day trading. So basically this course, it covers your midterm swing, all right, your short term, and also your day trade as well, if you have a trading account with me. All right, so that's about it for my sharing over here. And let's see, I have a question here from Facebook. Let's see any from YouTube. No, YouTube are just some weird comments, some bot, I guess. Okay, I have a question here in the comment section. Some stocks have weird buying lots 2, 3, 3, like where every few minutes. What your thoughts on this? Okay, the 2, 3, 3, 1, 2, 3, you will often find this end of the year. I do see this before last time, very long time ago. I forgot whether it's New Year Eve or Christmas Eve. They will have, I saw like maybe about 60 seconds before the market close, before the market goes into a matching time, matching hour. 60 seconds before, you start to see 60. They buy 60 lot, and then they buy 59 lot, they buy 58 lot, they buy 57, 56. They do a countdown, okay, for Christmas, okay, closing. All right. So yeah, we do see a lot of this. From what I know is the sharing from one of my friends from seafood.my, that the founder of seafood.my. So he himself also from the asset management side. So from previously, I look into it is because they just want to do some activities, and then of course what he shared was they just want to balance out the portfolio. Okay, I think that's the term of it. They want to balance portfolio balancing or something like that. Okay, so they just keep on buying bit by bit to fulfill the transaction. Okay, so basically it's not really that affecting the trading side. Okay, let's see any more questions coming in. Oh, one thing, how do you sign up for this? Very simple, you can just go to our website, okay, round and search. And I forgot to tell you guys about the price also, right? Okay, so let me share with you my screen over here. So you can go to our website over here, roundandsearch.com. So scroll down. So this is the portfolio that we have. 2021, beginning of the year, we the portfolio of RNS is making about like 31%. So it's still good, despite the market is bad. This one is disabled, not sure why. Okay, so we can just click on the 3888 is the 6-month course, so you can just sign up to it. Then fill up your name, email, mobile number, password, and then you accept, and then you sign up. Then it will link you to a PayPal website, so you can do a debit card or credit card payment from there. If let's say you want to do any of this bank transfer, online banking transfer, do PM us in our Facebook page, Round and Search official. Yeah. So from there, we share with you the bank account details so you can actually transfer to it. So once you transfer, do send us the transfer slip. So once you got you sign up from here, you can have the access in the website. Okay, so in the website, what you will see is there are recordings in the website where you can start learning through our recording session. All right, so from the recording session, you can see the past historical training course recording from it, and then there are also the revision class recording, so you can start learning from it before the actual training, actually attend the actual training. Okay, so this is the steps for you to look into it. So make this a New Year resolution for every one of you. All right, so yeah, I forgot to share with you guys a Happy New Year, right? So I'm gonna do it at the end of the session. All right. Okay, it's not too late, right? Okay, so seems like there's not much of the questions anymore. So I'm gonna call it off here today. So thank you very much for joining our first preview live stream session. So don't miss out our next week training course. I'm gonna see you guys there and learn about how the big boys work in the market. How do they do the transaction? How do we find the accumulation? I pretty much sure that you guys are very excited to it, because you can see from the accumulation to the price peak is more or less about 100%, sometimes about 200%, okay, from it. So yeah, I have a lot more to share with you in our training course. And Happy New Year's to you guys, and wish every one of you this year will be a great year for every one of us, great stock market performance, and a good return for every one of you. Why? Because you know how to identify the big boys' intention and ride on the big boys together in the stock market. I'll see you guys in our training course. Bye bye.